Hey guys, welcome back to another stream with me, Roy. I don't have a elite execution video for today, but I'm going to be running over a WTI oil breakout from last week off of oil inventories, which I felt like I underperformed on, and I thought it'd be interesting to go over. So let's get started. So we're going to look at the technical backdrop, and I always start with my higher time frame on the profiles. And kind of what I was thinking going into this day. I saw the idea, I saw the breakout play, and I was thinking in the morning about how I could access it. And for me, the oil inventories as a catalyst was kind of my idea going into the afternoon. I didn't really want to be trading it in the morning. We're not going to look at the ladder replay. We couldn't get that working for whatever reason. And then we're just going to conclude. So let's get going. So these are the profiles for oil. And just as a bit of a backdrop, the last OPEC meeting we had was kind of down, trying to think now, was kind of down here where we gapped up and had this really bullish week. Since then, we'd pulled back, quite significantly, coming all the way down to this level here, 81s, 32s. And then we'd been forming this, this kind of sideways range ever since then. And I think the sideways range is quite interesting to look at because going into the day, this is the day I'm talking about, where we had the breakout kind of above the 86s or a little bit higher, I suppose. Here, the weekly breakout this week, I'll dive into a smaller time frame, but just looking over the profiles, going into this day, value for me had been overlapping really consistently. We'd formed this really tight value range, and you have these nice tails on all the profiles showing that someone is picking up the market. There is likely a buyer in this market kind of since this inside day breakout, and so the idea was the skew at this point is that we have these really congested highs up here. We have a load of tails down here. So for me, the skew in this market was to the upside, just because of the way the profiles had been formed. We've had really, closes that kind of really didn't tell you anything. Closes in the middle of value, closes towards the highs. The closes don't really give you much conviction, but so tight value, tails are the lows. At this point, I'm thinking my skew on a profile basis is to the upside. Every time we stab back down into this inside day value area, the market gets picked up and consolidates in the sideways form. So let's look at that a little bit closer. So you can see here that value area, really kind of stagnant positioning, really stale, spends multiple days there. And you can see these tails a little bit more elongated here. And then, this is the value area I was talking about that every time we kind of stab into, we get picked up from. And then so coming into this day, which was a Wednesday, the day of oil inventories, which every Wednesday I'm kind of always prepping for oil a little bit. I'm kind of always looking to see, could we get a nice technical setup going into the oil inventories. Now, I do this on every Wednesday, so this day was no different. And so what we had going into the oil inventories was a market that had consolidated in the Asian session, had built value towards the lows, and had done quite a nice bid up breakout because we have the single print here. So there's been nice buying pressure, and since then the market kind of consolidated within this kind of 90-degree angle profile here. And this brings us into the inventories, which comes up here. But let's look at a smaller time frame. No, so this is not a smaller time frame, but this is just my weekly profiles. And I think on the weekly profile, you can kind of see it much clearer. This is the area that we're looking at for a breakout. And these are those tails that were stabbing into that value area towards there. And then you can see the kind of double layered weekly value areas onto what I like to call bikini profiles, where the market kind of stabs one side of the value, kind of goes the other side. And each time this happens, there is a trade. I don't really trade this much, but the trade is that every time you move out of value, because of the bikini profile shape, you're looking for a play back into value. and using that, overlapping VPOC and that really, really, really prominent value area as a bit of a magnet. And so that was kind of just the weekly profile setup going into this day. And kind of here, I've opened up the profile so you can see it a bit better. This is the overnight session where we come down, we test lower, we find support on prior day's value area low, and then we get a nice aggressive morning bid. We get another single print here above kind of that breakout highs, but the market does backfill and kind of take that. And then for the rest of the day, the market spends a lot of time bidding and then just chopping, kind of forming a bit of volume in this 90-degree profile. And so let's see what that looks like on the candlestick chart. So this is the OPEC day in question from ages ago, and that really, really aggressive bid up and kind of exhaustion and leaving that poor high. And then the market comes down. I find profiles much easier to kind of see this in. You can see where value's been built. These are the tails that I was talking about, and this is that inside day tight value area that I was talking about. The purple line is a monthly VWAP. I use it just for reference, but you can see the value going into this breakout day is very much chopping in and around the monthly VWAP. This is a 5-minute chart, so just a bit more of a zoomed in view of how the market had been trading going into the day that we're going to look a bit closer into. These are all the tails that are getting picked up, and it just shows for me it shows that one, there really is a buyer in this market because you're getting these really aggressive bids up every time the market stabs down. Aggressive bid, and then the market slowly comes back down, and another super strong aggressive bid. Really, really strong aggressive bid. I mean, it's going nowhere because it keeps getting kind of like stopped towards those highs, but you can really see from a 5-minute candlestick chart the aggression of the buyer who is in the market. And then so the day in question, Asia session, really nice stab through that kind of like balance block in the Asian session, cleans out some poor positioning, and then we kind of come up, and then this is kind of like the chopping area going into the oil inventories. So now we've kind of looked at like the larger time frame structure, looking at the profiles, looking to see where value is being built, value is being stored, getting a strong idea of, is there a buyer in the market? Can you identify a skew? And at this point in time, you're thinking if the market is going to move out of that tight balance, the skew is most likely to the upside just from the shape of the profile structures. And then this is a 5-minute candlestick chart of the day. So after that kind of morning breakout from the Asian session, the market, it continues higher, but it's very, very, very choppy, and you can see these like, tails and these wicks on the candles going into the oil inventories. And just before the oil inventories, you see this really interesting sideways block that we built. And then this is what it looks like on a 1-minute chart. So my thinking going into this, oil inventories come out at 3:30, and my thinking is we have this very sideways structure that's been built going into the oil inventories. Now we've broken out of those highs, and we're currently trading within that kind of like 90-degree profile that we had from the prior week. And so market is building value within that 90-degree angle, and the market at this point hasn't really tested much lower from the beginning of the day, and we've been building value higher, and it's just looking primed to break that prior weekly high. Now for me, going into oil inventories tend to be quite volatile events. What you get on the ladder, it's a shame I can't show you, but what you get on the ladder normally is you get offers and bids pulling just before the oil inventories. The market becomes really, really, really thin and really, really skitty. It's very hard to trade the actual inventories themselves, which is why I normally tend to lean into the inventories for some form of technical play. And what I was thinking was that at 3:30, we get a stab down, kind of break these lows, and gives me an opportunity to pick it up in and around here for then a move higher. As it so happens, these oil inventories were really, really muted. They were very, very quiet. You didn't have that pulling of the book, which you normally get, and you didn't have that volatility and that skitty price action that you normally get. Actually, this week, the oil inventories are very, very similar to the prior week where you got this breakout. And it's the second one I've noted where the oil inventories have been very, very muted. Regardless of what the figure is and what's actually coming out, normally just before going into them, the book, really does pull, and the price action, you don't really want to be pre-positioned into an oil inventories unless you're very much on side. So I didn't want to be pre-positioned into it. I wanted to wait for the oil inventories to get out of the way. I was hoping that it would offer and give me an opportunity to get back in. As it happens, I think I have a 10-second chart. Yeah, so this is a 10-second chart, so you can see it a bit better. Yeah, I did want to go over the order flow, but I haven't been able to get that working for you guys. But what I wanted to draw your attention to was the price action within this little block here, just before we bid up. So we offer slightly going into the oil inventories. That's terrible. We offer slightly going into the oil inventories, you can see here. And then we get, a few minutes of weird price action, but honestly, for what oil inventories normally are, it tends to be a lot more volatile than this. You can see no real volumes come in around that time, and we get a nice bid, and then it offers, and doesn't break those lows when the oil inventories comes out, and then it's this sideways action here. You can only really see it on a 10-second chart, but when you're looking at a ladder, you can see it really, really well, and basically it's just paused right at these highs, and it just stayed there for a few seconds or for a minute or two before you get this really, really aggressive break up. And I didn't take this trade because it didn't fit into my parameters of what I was expecting during the inventories. And I think this is a really, really big missed opportunity for me. There's an MA here. I don't normally use the MA on a 10-second chart, but I think this was a really, really, really prime area of entry, a really, really, really good tight risk reward opportunity where once this level breaks, that you're going to get put a good probably 46 on side, and you're only really risking, if you want to play it very tight, you could just play the lows of there, but most probably you'd be looking, having a stop somewhere in and around when the oil inventories first came out. So for me, this was a really big missed opportunity. I saw this play, I saw this technical play, the breakout itself, I saw that very much happening. And it was just a matter of how do you find access? Where is your best risk reward? Where do you really, really want to be involved in this market? Where are people actually going to step up? Where are buyers going to step up and take the market further? And for me, the oil inventories was it. And I didn't get the reaction I expected on the oil inventories, and that kind of threw me a bit and kind of put me off taking this trade, when in reality, it shouldn't have been putting me off. Yeah, so that's kind of it. But the market goes quite far. Let me find a 5-minute for you. The market goes quite far after that nice aggressive bid. And you can see here that kind of level where we consolidated, for that 10 seconds ever so slightly just before we get that pop up. The level was very, very clear. It was very, very obvious. And I think for me, that's the reason why I wasn't super eager to rush into this trade, because it was such an obvious trade. I tend to find that the most obvious trades require a more oblique way of approaching them. I find, normally pre-positioning into a very, very obvious trade is the best way to go about it, because on the very, very obvious trades, especially breakouts, you tend to get some kind of, I don't know how to say it, trickery around the level in question. So everyone's looking at the same thing, and what you normally get is maybe a failed breakout, a bit of a chop before it actually goes. And so I was worried that would happen. And I was thinking that this level is way too obvious. Too many people must be looking at this. The oil inventories didn't push enough people, didn't squeeze enough people, and didn't pull back and kind of clear out some of the positioning as much as I'd wanted it to going into this breakout. But nevertheless, you got really, really good tight risk reward access, and the market, closes pretty much right at the highs, and it sticks there for the remainder of the session. So I think it was a very, big missed opportunity. If you guys don't look at inventories, they're definitely something to keep looking out for. I used to map, what was coming out, and I used to try and gauge reactions about what was coming out. I think that was a bit misleading in many ways, because sometimes the market is fixated on different figures, because there's about 3 that come out at the same time. So now I use them more as just to lean into any technical setups that I might have, and looking for a moment of volatility where you can get a squeezing of positioning, or you can get a buyer stepping in, and you just kind of let that play into whatever idea you have. And so yeah, that's kind of it. And let's look at the conclusion I wrote down. So yeah, so I think the most important thing for this trade is obviously having your technical landscape mapped. I can't stress that enough. Going, every Wednesday, as soon as I sit down at my desk, I'm thinking, okay, what can oil do today? How can the inventories set me up with a nice technical, nice technical access to a bigger play, a much higher time frame play that I have in mind? And on this day, it very much was there. On other days, it's not. On most days, it's not. But it's really important to have your technical landscape mapped out, just on the off chance that it does play into your hands, into something that you've been wanting to find access to. And having the patience to wait for that right opportunity. So I did this quite well. I probably did this too well because I didn't take the trade. But going into that day, I didn't want to be involved before inventories. I thought inventories was going to be my best risk reward setup for that breakout. If it happened beforehand, I probably wouldn't have been on it. And I might have been looking for the inventories to kind of retest that level maybe, and another opportunity to get long. I probably would have approached it in a much different way. But it's having that patience and not being involved in that chop, basically, before you get that kind of breakout. So I feel like, even in this chop here, it kind of pulled back a few times. I think there was a lot of opportunity to get chopped up if you were looking for that break. And so that's why I think the inventories are very, very good to lean on when you have a technical idea. And then taking the risk necessary. This is definitely something, that I need to work on. I don't know if I was up or down on the day, but I might have been either, trying to protect profits or trying to cap losses. So I think like I say earlier, you don't always get such a clean setup on the oil inventories. And so when you do, you kind of just need to take the appropriate risk, give the trade the risk that it deserves to play out. And that's it for me today, guys. But I hope you find that interesting. I hope you check out the oil inventories. They come out every day at 3:30, every Wednesday at 3:30. If you guys have any tricks about how you trade them, or any technical setups that you used to lean into, then I'd love to hear you guys' thoughts. And that's it, guys. So thank you so much for watching the stream, and I'll catch you guys next week.